Yo, welcome back guys, welcome back to another video. Hopefully everyone is keeping well. So guys, in today's video we're going to go over a very important topic. A lot of people get confused with the idea of a change of character or a market structure shift, and a lot of the time they end up getting caught thinking that price is actually going to reverse when it really doesn't. So today I'm going to show you how to identify the fake change of character. It's an extremely important topic, so I want you to do right now, sit down, relax, get your notebook, and make sure to watch all the way through to the end of the video. The value that I'm going to drop today in this video is going to be insane. Before we get started though, what I want you to do is head down into the description right now guys and join the free Telegram mentorship channel. In this channel I post a lot of the day in the life of what goes on. I post a lot of tips, market analysis, etc. Keeps you updated with a lot of things. As well as that, I want you to go down right now and follow me at MoEffects on Instagram. Once again, a lot of exclusive content for you there as well. It's actually very interesting, so make sure you follow me. With that being said though guys, let's get straight into the video. So the fake change of character. How do we avoid manipulation? So first of all, we got to understand what exactly is a change of character. So for anyone that doesn't know, the change of character, first of all, is when people think that the market is now going to reverse after seeing the most recent higher low or the most recent lower high being broken. Gives us the indication that there potentially could be a market structure shift. So for example, if we're in a downtrend right here and we're creating a lower low, pulling back, creating a lower low, pulling back, creating a lower low, then suddenly we're not actually just pulling back, we're actually breaking above that high. So a lot of people do then is wait for the retest back down and look to buy right here. But the fake change of character essentially is when price gives you that change of character, breaks above the most recent high right here, but then price suddenly just continues to the downside. So how do we understand if it's actually going to be a true change of character, a true reversal, or if it's simply just a fake change of character like this? So how do we understand that? Well, it's very simple. You guys know I love to simplify every single thing that I teach, correct? And there's only one confirmation. There's only one thing to look out for here, and it's the higher time frame, correct? So how do we avoid it? Simple. Follow the higher time frame. You just want to follow the higher time frame. Now, what do I mean by this? We're going to hop into the chart and I'm going to explain it very clearly for you now. So essentially what happens is a lot of people here lose sight. Okay, they lose sight of the higher time frame structure. So for example, let's say that the higher time frame structure has always been consistently to the downside. What is going to happen sometimes, eventually, if you do hit some sort of strong support to the left, or if you hit maybe a demand zone, okay, you're going to have much deeper pullback. So a lot of the time in a range, you'll have maybe some minor pullbacks. Sometimes you will have a deeper pullback. And this is because as you reach lower and lower, there's going to be more buyers' interest. There's going to be more buyers' participation, and more of the demand is going to be bought up. So what happens sometimes is that there's a lot more buyers stepping in this pullback, causing us a much deeper retracement than the ones right here. So what ends up happening though is that this high would be cleared, but this high usually just ends up acting as inner liquidity. Now, inner liquidity is another topic. It's very closely related to what we're speaking about here, which I'm going to speak about further in another video, hopefully. Now, what ends up happening though a lot of time is price will retrace deeper into a more extreme point of interest, a more extreme supply. So when we talk about extreme, we're talking about the one that's in the most premium, or the point of interest that is in the most discount of a range. So a lot of time, we're going to show you some examples right now. Well, here's a decent example on AUD/USD, for example. So a lot of people will be looking at these highs, these lows, etc., marking them out. And then what do they see? They see, oh, boom, we get a break right here. So they see that they've gotten a break over this high. So for them on a 4-hour time frame, on a higher time frame, this is a higher time frame change of character. So this is what they'll do. Now, what they want to do then is they'll start looking for buys straight away, and they'll be marking out this point of interest, and they potentially might place a buy limit right here, and then they'll be looking at points of interest down here as well, some lower demands down here, and then they'll be interested in taking a look at buys. And what eventually happens is, boom, first one, that's a stop loss, that's -1 hour, and then the second trade, boom, that's another stop loss, that's -2 hour. and you've already taken 2 losses right here, okay? Essentially, you've taken -2R because you didn't understand the market structure. And if you took a look at the market structure and understood the fundamentals of what is going on with AUD, USD, you'd understand, first of all, that the dollar was extremely strong at the time of this play now. So the dollar was extremely strong, meaning that we were simply just looking at AUD, USD sells. We have no interest whatsoever in looking at the buys. And second, you could see by the market structure itself, it's pretty bearish. So it makes absolutely no sense for us to actually be looking for buys. So what ended up happening here is this actually was not your change of character. This simply just acted as your inner liquidity. So I mark it right here, and this was simply inner liquidity. And what did price do? Instead of price always reacting from the one right here, from this supply right here, price instead wanted to go all the way up, very deep into our supply right here, clearing this inner liquidity and then moving down. So you have to be very careful. And a lot of people will say, okay, well, how do I know if it's a change of character? Or how do I know if it's or if it's a fake change of character? It's very simple. First of all, if you want to see a reversal on the higher time frame, don't just wait for one time frame's breakage structure. I'd want to at least see the 4-hour change of character, and I'd want to at least see the daily change of character. We need to see both of them. So you need to see multiple time frames breaking the structure. One time frame breakage structure is not enough, because sometimes that one time frame alone is simply just a pullback. So a lot of the time, let's say you're on the 15-minute here and you want to see a 1-hour breakage structure, this for me is not enough. Just this break is not enough. I'd like to see at least 2 highs being cleared, because a lot of time this will indicate that this was multiple time frames shifting to the upside. This is what you want to see. So be extremely careful. The rule is very simple. If I'm higher time frame bearish, I'm avoiding all of the bullish changes of character. Just completely avoid them, because more times than not, the change of character, the reversal, only occurs once. Just remember that. The reversal only occurs once, but the fake changes of character, okay, price reaching all the way deep into a range, happens a lot more often than an actual true reversal. So when you look at the numbers, instantly, the probability of reversing and the probability of it being just a fake change of character, well, the probability is much higher for it to be a fake change of character. And at the end of the day, trading is all a game of simply just probabilities. So we're always trying to pick the most probable decision. And the most probable decision right here is this one, because there's much higher percentage of probability that the fake change of character will occur in comparison to a change of character. I'm going to give you one more example just to drill this home. So here's another example on gold. So what a lot of people would have looked at here is they would have seen this is the highest point and this is the low. So any break below this, that means we're shorting. So a lot of people now will simply look to short. So you see a break. So what will they do now? Let's short from here. And as you can see, market just goes straight through it. The short doesn't work out. The buys actually work out, and the buys work out from the lowest low, from the lowest point right here. This is our most extreme demand. Price filled in the imbalances, cleared this as inner liquidity once again, and tapped in to our order block, institutional account, whatever you want to call it. Okay? Now price is reacting. How did I know? Simple. The probability that price was going to sell off was low. The probability that price was going to go up was much higher. Why? Because on the higher time frame, we're clearly very bullish. Fundamentally as well, gold is really bullish right now. So simply stick with the more higher probability decision. And that's pretty much it for this video. It's very simple, but looking out for a fake change of character and understanding what the most high probable decision to make is going to take your trading to the absolute next level. Once again, if you're interested in taking your strategy, this current SMC strategy to the next level, I've given you a free book down in the description. So make sure to definitely go ahead right now and take a look at that book. And yeah, with that being said, I appreciate every single one of you for watching all the way through to the end. Drop a like, drop a comment if you want to see a video on inner liquidity, and I'll catch you guys on the next video. Bye bye.